Top investors watching your money. Joining me right now is the Fitzgerald Group principal, Keith Fitzgerald, AmeriVet Securities head of U.S. rates, Gregory Farinello, and ERShares CEO, Joel Shulman. Great to see everybody this morning, gentlemen. Thank you so much for being here. A slowdown in consumer activity. Retail sales were down, fell 3.9% last month. Residential property sales dropped 20% from a year earlier, Joel. This puts some pressure on Beijing to start supporting growth in China. The economic numbers in China show a decline, even as the consumer seems pretty strong in the United States. What's the impact?
Right. Well, this is, I think, the big story that's really not getting enough attention, that the impact of many economists are missing out on the impact of China's growth and slowdown and what it means for the global growth economy and also what it means for future inflation globally. I mean, we have to remember that China purchases 50% of global commodities. And some of these commodities like steel, iron ore, and aluminum have been dropping quite a bit since September, October, so they're coming down. And in fact, you know, when we look at distressed debt, 50% of all the dollar-denominated distressed debt is now in China. They've got an extraordinary, real estate market that has driven their growth by 10 to 15%. Their GDP, 10 to 15% of their GDP is based on real estate. As that comes down, crashing down, because they've got a lot of vacant properties, that's going to reverberate throughout the world with depression on global prices for the materials, and we're going to see a significant effect in how it slows down global growth in the U.S. and other markets in Europe and so forth. And so this is a big story. I think it's coming out. Yeah, go on. Go ahead, Maria.
Yeah, are you seeing any flows out of ETFs that hold China as a result of this?
Yeah, no question about it. I mean, the ADRs lost over $1 trillion in 2021, and we've basically eliminated all our holdings in China over the last year or so, and we're seeing many other money managers reducing their exposure to China. Now, there's some people who think it's a great opportunity, but I don't see that. I see this market continuing to decline.
Yeah, and there is also a national security issue there. We know that. Why would any American investor want to fund the expansion of the Chinese Communist Party by investing in Chinese stocks right now, knowing what we know about this adversary? You, Keith Fitzgerald, Gregory Farinello, and Joel Shulman. Great word on Wall Street, guys. Thanks very much. Terrific conversation, and we'll see you soon.